Welcome back to another episode of Real Estate. Have you heard of fractional investing and digital tokenization? Well, in this episode, we're going to explore this brand new frontier that incorporates advancements in digitalization to level the playing field and make real estate investing more affordable to the man on the street. Keep a lookout for these hidden cats, and the first 10 who submits the right answer wins a $10 Grab food voucher. We're speaking to two leading investment platforms that are utilizing blockchain technology and fractional investing to reimagine how we approach investing in real estate. And several industry experts will share with us why Singapore is so well positioned to take advantage of digital real estate investing and where we might go from here. First up, we're going to speak to a homegrown fintech company, Fraxter, a blockchain-enabled real estate investment platform that has already concluded several fundraising and investment opportunities in Singapore. Thanks for speaking to me, Oliver. Can you explain what type of company is Fraxter?
Fraxter is a MAS-regulated real estate tokenization and investment platform. We offer real estate investment opportunities in bite-sized amount to our investors.
Some of the traditional forms of real estate investing can be quite capital intensive. How does fractional investing level this playing field?
What Fraxter has done is to fractionalize these investment into smaller amounts of say 20,000 or less, allowing investors to better diversify their portfolio and also to manage their risk.
And how is this different from, say, REITs?
With Fraxter, the investor participates in individual projects. So that entire upside would then be channeled back to the investor rather than being reinvested. So this gives the investors really a flexibility to redeploy the capital as they choose.
How does blockchain technology enhance this process, and how does Fraxter utilize it?
Blockchain technology is something that we can rely on for transactions, also for investors to track their investments. And in the near term, we also intend to use the blockchain to allow investors to trade their tokens with one another.
Can you share some of the latest investments that you've offered?
One of the biggest investment that we have done this year was the collective sale of Gloria Mansion. We have basically created an SPV, and that SPV issued tokens that were units in a collective investment scheme to our investors. So Fraxter actually offers investors to come in to invest as a developer rather than buying the units for investment at end.
How will Fraxter continue to evolve its processes even as this digital space matures?
We are looking to expand into Australia, into Europe, into other areas in Asia as well. And we see blockchain technology as a way to unify all these marketplaces.
We've heard from Fraxter how its founding mission was to democratize real estate investing, making it more accessible and affordable, and how they're utilizing blockchain technology to secure their investments. But Fraxter isn't alone in this nascent market. Other new players have moved quickly to offer unique products, strengthen their market share, and expand their consumer base. One such company is MAS-licensed CASA, a real estate securities trading platform. Can you explain what does CASA offer to investors and that is different and more attractive compared to what's available in the market?
But what we do essentially is, because we're lowering the barrier for entrance, we are able to make it more accessible. The other part is that we provide a secondary exchange on our platform. You're able to sell your assets at will in a very liquid secondary market.
CASA is licensed in Singapore, but you kicked off your initial IPOs in South Korea, particularly focusing on key commercial assets in the Gangnam area. Why did you decide to start in that market, and how has the response been among South Korean investors there?
We mainly started in Korea because I'm from Korea, and at that time in 2019, the Korean government initiated the Sandbox program. We focused on providing people with very, very lucrative office buildings initially, but then ventured on to hotels and warehouses. So just increasing the number or types of assets that we can provide. But for Singaporeans, we're looking forward to provide more high yield generating products.
A key feature that you've already mentioned with CASA is that you roll out this CASA Exchange, which is your digital secondary market within your ecosystem. Now, how does this digital marketplace benefit the various stakeholders and investors that are active within your platform?
If we provide liquidity to a market, it really benefits everyone, not just the investors, but the asset owners who are selling the said products. but it also increases the kind of types of participants who can come in and increase the attractiveness of the market.
We heard MES announce Project Guardian. In your opinion, how might a more open and interoperable network that supports the trading of digital assets across platforms transform what we know and understand of traditional real estate investing?
The government in Singapore has been very progressive in going in this direction. So I think for real estate, interoperability across different exchanges, different platforms really means that it's going to increase liquidity because you're able to transfer the assets at will, but you're also able to invite more participants, potentially not just in Singapore, but outside as well.
CASA shared their plans for a virtual secondary market to unlock illiquid capital locked in real estate, as well as how they benefited from a supportive regulatory framework in Korea. In Singapore, the Monetary Authority of Singapore has signaled its support to explore the economic potential of asset tokenization. To help me understand what this means for the industry, I spoke with two consultancies to find out more. Let's speak to Knight Frank to find out how this evolves the processes of capital markets transactions.
Thanks for speaking with me, Daniel. Now, digital tokenization of real estate assets has picked up pace in recent years. Based on your experience, is this a technology that most major level institutional investors are keen to adopt?
At this point in time, it seems to have had more success with the retail investors who are keen to diversify their portfolio.
Now, one of the promises of asset-backed tokenization has been this unlocking of liquidity. Do you really think that stakeholders are able to tap into this sea of capital?
The main people who would benefit would be the retail investors because opportunities which were previously only available to institutions are now made accessible to them.
Do you view the adoption of tokenization and fractional investing and how might it transform the capital market scene?
I see it as a major positive for Knight Frank with this wider array of opportunities for retail investors that can only spell good for us as brokers. We have a private office team seated here in Singapore that can actually help investors to actually reach out for this kind of opportunities. Definitely an area that we are keen to explore and potentially also collaborate with some of the existing platforms.
We've heard forward-facing views from Knight Frank. Now I'll ask Evan Tai how this shapes brokerages for the future.
In your opinion, would this type of asset tokenization be a disruptor or an enabler in Singapore's real estate industry?
I don't think it's an enabler or a disruptor, but I think in the market it provides a good alternative for investments.
New products like security token offerings and fractional investing aim to level the playing field, and they claim to democratize real estate investing. If it's rolled out to a wider pool of investors and stakeholders, how might this elevate businesses, especially brokers?
It allows investors to buy lumpy assets to fight with what we call institutional investors. Going forward, I think real estate firms might basically dabble into issuing or even selling, trading tokens as part of their services.
So last month, MES announced Project Guardian. Now, although this hasn't covered real estate yet, in your view, do you think it's only a matter of time that this sort of framework is applied to real estate investing?
Real estate basically is one of the best asset-backed security available. We have already seen tokenization deals done in the market, so I think I would not be surprised to see real estate to be reintroduced back into this project. We have managed to sign MOU with the creator of SDEX, which is one of the exchanges that we have seen on the market.
What are some of the hurdles that we might face in that creates inertia in this adoption of tokenization?
Well, being the first mover presents advantage, and being the first mover also presents some risk. So I think the inertia needs to be very important, and the inertia must be backed by education and awareness. There's a lot of room for this market to grow.
As real estate investing increasingly goes digital, this opens up more opportunities for people to invest in high capital assets at a fraction of the cost.
This segment will benefit and grow stronger when it's supported by secure financial institutions and regulatory frameworks. Thanks for watching another episode of Real Estate. Real opinions, real statements. How many cats did you see hidden throughout this video? Don't forget to submit your answers through the link in the description box below.